Chasers, and welcome back to another episode of the Chasers channel, the podcast where we dive deep into the world of business and finance and bring you expert advice to help you make informed decisions that bring you closer to achieving the dreams you are chasing. Today I'm joined by my business colleague, Dale Wilson-Rea, and we're talking about a topic that can make all the difference to your bottom line: tax planning. I'm your host, Chris Becks, a financial and business advisor with over 40 years experience and the founder of the multi-award winning CBEX Business Solutions for Good. As this is an accounting and tax topic, and as a member of CPA Australia and a registered tax agent, I'm obliged to give you this general advice disclaimer before we begin.
The advice provided is general advice only. As in preparing it, we did not take into account your investment objectives, financial situation, or particular needs. Before making an investment decision on the basis of this advice, you should consider how appropriate the advice is to your particular investment needs and objectives. You should also consider the tax implications on your financial situation. Chris Becks, CPA member number 805103 and registered tax agent number 629433015, is a director of CBEX Business Solutions for Good and is authorized to provide accounting and tax advice.
Now that is done, let's dive into this episode. Welcome, Dale.
Thanks, Chris, and hello, Chasers.
Dale, tax planning can be done at any time, but we're not just talking about scrambling at the end of the financial year, trying to get data up to date and strategies outlined and then implemented. We're advocating for taking a proactive approach, and that starts with a tax planning meeting after you've lodged your March BAS.
That's right, Chris. While June 30th is the official end of the financial year, here at CBEX Business Solutions for Good, the March quarter BAS deadline actually serves as a fantastic springboard for good strategic tax planning.
Exactly. So why is this timing so critical? Let's break it down. Why tax planning after the March BAS matters. Number one, fresh financial data. Your March BAS provides a clear picture of your income, expenses, and tax obligations for the first 3 quarters. With this data in mind, we can analyse trends and identify potential tax advantages specific to your business. Number two, proactive strategies. The earlier you start planning, the more options you have. Think about it: maximising super contributions, prepaying deductible expenses, or strategically timing asset purchases all become possibilities when you address them well before the 30th of June arrives. And number three, minimising tax surprises. Nobody enjoys a tax time surprise. By taking a proactive approach, we can estimate your potential tax liability and help you structure your finances accordingly. This can avoid that end of financial year scramble and potential tax penalties. And more importantly, plan and budget for the payments to the tax office in the new year.
Here's the thing, our tax planning meetings are not just about saving money. It's also about gaining control and making informed decisions. We also keep our customers up to date with current information, which helps keep them compliant and aware of any changes.
Absolutely. A good tax planning meeting will not only identify tax saving opportunities, but also help with cash flow management. Understanding your projected tax liabilities allows you to plan for upcoming tax payments and avoid cash flow crunches. It also future-proofs your business because we can advise you on the tax implications of potential business decisions like expansion or restructuring. And another good tip is that it's educational. We help you understand the latest tax rulings and government legislated changes like the stage 3 tax cuts that just been passed, and be aware of the record keeping requirements that are associated with it.
It's important to remember that this is not a DIY project. A qualified accountant is your partner in navigating the complexities of tax law. They can ensure you're compliant and identify opportunities you might miss on your own.
That's right. So don't wait until June. Schedule a tax planning meeting with your accountant after you've lodged your March BAS. It's a small investment that can yield big rewards for your business's financial health.
And remember, if you want to be well prepared for your tax planning meeting, contact Sinead Hewitt today on 03 55 61 2643 to get our free downloadable checklist to help you prepare.
Thanks for joining me today on the Chasers channel, Dale.
Thanks for having me, Chris.
So, by getting in early for your tax planning meeting, you will be staying informed and compliant. Make the most of your strategies and avoid missing out on the opportunities to pay less tax. Thank you for listening. I'm Chris Becks, and I look forward to presenting our next episode to you.
If you enjoyed this episode and you'd like to help support the Chasers channel, we would love you to share it with your business friends and colleagues, post about it on social media, or leave a rating and review. To catch all the latest from CBEX Business Solutions for Good, follow us on Facebook at facebook.com/CBEX, Instagram at CBEX, and on the internet at cbex.com. Thanks again, and we'll be sharing new info with you on our next episode.